Gregg Smith is with us in New York this morning. Did we hit bottom in June?
Hey, good morning, Stuart. Well, it looks like the market might have hit bottom in June. I'm going to give you four things to consider today, and that's certainly the $64,000 question on investors' minds. But first, if we did hit bottom in June, it seems like the buyers are higher, and I know that statement might confuse, and let's come back to that in a second.
Right.
Second, it seems like risk on is in vogue again.
Right.
We're seeing all the risky assets get bid up. Third, since big tech has reported in late July, it's been a bump and run market, and that's a golf analogy. And lastly, in the next 90 days, as we approach Thanksgiving, investors' focus is going to start to shift on the 2024 earnings. But let's first think about.
But you're laying out a case here where we bottomed in June.
Correct.
We've come up very, very nicely. You're laying out a case that we're going up some more. Are you?
Well, it's not going to be a straight line up to the right,
but
and hopefully some of the market volatility is behind us, but it seems like brighter days are ahead. And I think there's a whole group of investors that have been sitting around not believing that the market bottom in June is the bottom. A lower low will come, and they've been waiting to buy equities and contribute more money to the market.
Is this kind of a fear of missing out?
Those people are now realizing that might have been the low, and they're going to chase equity prices higher. So that's what I mean by the buyers are higher.
And that's fear of missing out.
That's correct. A little bit of FOMO.
And if you got the big guys on Wall Street, the heavy hitters with hundreds of billions of dollars, when they've got a fear of missing out, they pile in, and you get a real good rally.
You got a lot of capital on the sidelines,
yeah.
Both on retail investors too, and you're seeing the risk-on assets, whether it be crypto, meme stocks, and other Cathie Wood names, all of a sudden start to catch a bid, and you're seeing them on your TV screen all the time.
It's nice to be in this position, isn't it? We've had all these months we're down, 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 and have we hit bottom? Where's the bottom? And now we've got a very nice rally in progress. Look at us now. We're at, 34,000 for the Dow? That's a nice rally. Oh, I need to ask you about Twitter.
Yes.
You own it.
I do own Twitter. I've joined you many
selling?
times. I've been holding it. I've been accumulating. It's starting to feel like we're more in the sixth or seventh inning with Elon in the battle here,
right.
and the street's starting to price in a win for Twitter, and that Elon's going to be put this company and be forced to buy it. We're seeing more and more evidence of this week his $7 billion sale of more Tesla stock.
Yep.
So people are wondering, is he beginning to get ready to pay for it?
Well, Dan Ives was sitting in that seat earlier this morning, and he says that Twitter's going to go to about $50 a share, and Elon Musk is going to take it.
Elon's an interesting character, right? You don't know what's going to come out of his mouth. On one day, he says he's not selling any more Tesla stock, then he's selling more. But, as a former poker player, he has a tell. It's very interesting to see what his tell is. It's usually when his lips are moving, right? So, we'll see what's going to happen, but it's looking increasingly likely that he's going to be buying Twitter.
Gregg Smith, thank you very much indeed, sir. We'll see you again
soon.
Thank you.